Boom. Happy Monday, everyone. Prices of BTC currently at 9,400. Let's get to the Bitcoin analysis. All right. So first things first, smaller time frames, okay? 15-minute chart, all right? I did see this trend line coming about and I was hoping to short this, but unfortunately this all happened overnight. So if you were watching this kind of trend line that I had mentioned to the Advantage members yesterday, you got a nice short in once this breach happened. You actually had a good 15-minute candle right here closed under that trend line. So you had about a 15-minute time frame as well as this one right here to open up a short and you'd still be in profit, okay? Aside from that, I mean, I think the longs personally, I think are worn out, and I'm going to present my case for that in a little bit, okay? But again, folks, if you don't understand how to draw these trend lines, all right, let me pay off some bills first. Let me let y'all know that Cryptosomniac.com products page right there, okay, buy my technical analysis course. Learn how to draw trend lines, okay? Do this for yourself. Be the person that learns how to fish rather than being given a fish, okay? And I promise you, you will be helped. You'll be able to help yourself and understand why you are so prone to making mistakes in this market, because you're not understanding the language of the market, which is technicals. All right, as all this garbage about buy this indicator or pay me this much amount of money to give you signals. I'm not here to do that. Okay, my job is for me to teach you how to actually understand how this market works. Okay, and I do provide trade setups and information. Okay, obviously you can see with all these gains people have been seeing clearly. People are seeing the value of our information, our education, and they like it. All right. So with that being said, our group is not about giving signals. All right, we're here to teach you how to fish in this market. We're here to help you understand the language of the market. All right. So getting back to the technicals, okay, first things first, 15-minute chart, we see this trend line being formed, right? And once it broke through, now we're kind of moving sideways, okay, on this prior resistance. All right, so this area, I'm going to mark this out for y'all. All right, let's keep it simple, okay, right there. Actually, this chart's a bit unclear, so I'm going to go to this chart right here. Okay, so let me get rid of this. Okay, over here. All right, so we're gonna go to this area right here. All right, I'm gonna make this a little bit more clear so you can see exactly what we're dealing with. This particular area right here. Okay, so this was resistance, right? Breaking through support. Again, I don't have the exact level because it's hard because there's a lot of deviations up and down. When in volatile markets, when there's massive swings up like this, the resistance is not kind of a simple price marker. It's more so a range. Okay, so the range in this case is probably say this kind of red box to over here, something like that. Okay, so you could see right here, okay, this was support, resistance, and then once this broke through, became support, and then pushed on through, and now we're just sitting at support. Okay, so what this tells me is price wants to at least gravitate here, bounce here, because there's a lot of buyers who don't want this price to break down. All right, so shorting in this area is probably not wise, at least yet. I would wait for at least a 1 hour close under say 93.50, which is just below this red block. All right, I would wait for longs, definitely, like I've been saying for the past couple days. All right, here's a good way to look at the longs. Okay, here's the trend line. I'm gonna take away the volume. All right, so this trend line from this touch, multiple touches right here, another last touch before the initial breakdown. Okay, so I really like to find a point like this, initial point of breakdown, because it gives you context of everything that's happened to price after this broke down. This is the most important point in this entire chart for the last say month or so. All right, why do I say that? Because if you look at this red block, look where price is unable to close above this red block, which is the point of the initial breakdown. okay, which also happens to be coordinated with, this trend line right here that was holding up price, right, with some of these higher lows that we were seeing, okay. Again, that trend line comes to meet price right there, okay. So you can see we have not closed above the red block. We have not closed above this trend line right here, okay. So once I see some candle closing at least a 4-hour or a 1-day candle above this area, then I'm getting more confident in this particular block potentially being broken as resistance. Until that happens, I don't know how else to be, a bull in this particular area. It's just hard for me to say that this has to go up. It already ran up so fast, so quick. So you don't think that this is going to have some payback to the other side, right? This is, to me, honestly, a short squeeze and a deviation of all of this right here, okay? The thing is, people are now starting to inject their emotional bias of these China blockchain tweets from Xi Jinping and all this ranking information of other alts and volumes really high and all this garbage, right? But remember, the most important thing that you need to pay attention to is price. Forget volume, forget the indicators, forget whatever else your other paid group leaders are saying about why price should go up. Think about something as simple as this. You draw this and tell anyone else that, hey, well, what about this? This is the point of initial breakdown. We haven't broken above that. And watch their heads just explode, trying to inject their emotional bias and fulfill why the price needs to go up, all right? Because here's the thing. They're overexposed right here, all right? Or they got in, haven't taken profit, and they're slowly just watching it bleed back down, watch BTC bleed back down, and they don't know when to cut it, okay? They don't know when to cut this trade, okay? They think that price is going to keep on going up. So what they're going to do is they're going to be the fuel to the fire when prices slowly do break down. And once this area right here, which is the monthly open, right? Or I would say probably just 8250 area, once it starts being broken to the downside, this is probably the most important area, by the way, folks. This 8250 marker that I have, and I'll tell you guys in a second why, okay? That's the most important marker for this whole thing because it's just like this. Look, initial point of breakdown, right? Broke down, came back up, retested it as resistance. What do you think is going to happen when this was the initial point of breakdown and this thing went back up? So imagine this the other way now, okay? So now we're going the other way. We're going up. So what's price going to do if it even is supposed to keep going back up? Well, it's going to try to gravitate to the most impactful area for price. And this is just very common. I mean, it doesn't have to happen. It doesn't have to happen like this, where price has to come back to this area and then push back down. But what this tells me is there was just a lot of money sitting on the table in terms of short liquidations. And obviously, 2 days ago or 3 days ago, whenever this happened, $330 million was liquidated in shorts. So clearly the bulls knew that if they wanted to fuel this run up, they just had to put down a decent amount of money in this area, start the fire, and let the bears get liquidated and fuel that fire, which fueled it all the way to 10,500. Okay, and so now what's going to happen? Well, the bears are not going to just let this thing, bend over and say, all right, well, I guess, we just got liquidated. We're just going to go back up. What they're going to do is hold on to their resistance, which is this red block. And they're going to do the best they can to ensure that price keeps pushing back down. And the first point that the price needs to come back down to is right here. Okay, that's the 9,000 marker. So if price is supposed to, this was basically like a double top. Right, so if price is supposed to go back down, it should be coming down to 9,000 at the very least. Probably pull back up a little bit, and then if it's supposed to go back down, it'll probably go down like this. It needs to come back to this 82.30 mark or 82.50, that range right there. Okay, and again, like I said yesterday, if we're supposed to truly be bullish, we'll probably do something like this, pull down a little bit, right under that, and then create some higher lows, and then keep pushing back up. By the time this happens, that slow breakdown, all right, guess what's going to happen? People who FOMO'd up here, all right, people who bought in right here, they're going to start selling right here because they're going to think that price is going to break down all the way. So either price is going to come back over here and push off, or price is simply going to come back here, bleed, push back up, and then come back down, slice through this, slice through this, because I guarantee you that if we come back in this area right here, all right, this is going to get broken. I think the bulls already know that they do not have enough money to sustain this low right here like they did for this run up. Okay, for the most part, I think their time is up, unless again I'm completely wrong, and then we come back to this level, and then if we start pushing off, all right, then I'll be bullish. Okay, I'll be bullish at least from this area back up to this red block, and then I'll wait and see if this thing is going to break, and if it does, then I'll take a trade from here on up. Okay, so those are my thoughts, my plans, going forward. All right, so I'm gonna delete that. Let's see, I'm gonna delete this because this is not an optimal short anymore. All right, okay, so let's see here. All right, so here was that 4-hour chart. Remember yesterday and the past couple of days I've been saying this over and over again. All right, I said that this range right here is analogous to this, right? This whole distribution that happened all the way from July through September and then broke down. This yellow block right here in the 10,400 is our yellow block down here around 82.50 or so. Okay, I mean it's a range, but let's just say 82.50 for now. All right, so where is price most likely to gravitate to if this area gets taken out? I think it's going to come down here. Okay, I mean if we start looking at the smaller time frames, I think at least it's going to come down to this area first before it breaks down to 82.50. So this area that had consolidation, this little block right here, that's between $8,800 down to about 8,400. So I think price is probably going to come down there for now, before it hits that 82.50 area. Okay. Let's see. Well, like I said, for the most part, I'm looking for this price to slowly bounce up in this area, either break through or retest back up. Who knows? It might hit this trend line again and then get rejected, because we haven't seen a rejection of this trend line just yet. And I think that also makes sense, because let me show you guys something else. Okay, so when we go back to the 15-minute chart, okay, so I would say price is probably done maybe something like this. Okay, God, that's terrible. I'm terrible at drawing lines. All right, it's probably done something like this. Okay, so I'm gonna make this maybe a different color too. So here it even stretches way back here. All right, so I'm gonna pull this out and let me show you guys some magic. Okay, all right, so let's make this white, let's make this a bigger. Okay, so from that to this right here, this was really the range. Okay, the sideways movement. This was all just pushing back down, but climbing back into the range, pushing back up, climbing back into the range. So when you're looking at price, look for ranges where price has spent the most amount of time. And this is the best way to draw the range, like I've drawn it, right? So price should gravitate back here, okay? It should gravitate, make a rounded move back here, maybe push up a little bit, and then push back down. So at this particular point, I don't really see a reason to short here because price is already broken under the range. The most likely area for me to short is probably if price comes back into the range. If it pushes up higher, I'm probably gonna close the trade out. But if you are looking to short, technically your stop should be either right here, 97.25, or up here for deeper short, a deeper stop for your short. Okay. If I'm looking to long, like I said, right, the longs are very easy. Okay, I'm gonna go to the daily chart. I'm gonna make this really simple for you guys. Okay, so even on the daily chart, it's kind of like this. Okay, it's like that. Remember that red block I showed you earlier on this 4-hour time frame? Ah, shit. This 4-hour time frame right there, right? That coincides somewhere around that same area, right? So I'm gonna do that again. Okay. So that particular area right there, that was the last, daily candle that we had before breaking down and slicing through. Okay. And look where price came back to even yesterday. Came back to that same red block. We're unable to close above this area. Let price come up here. All right. Show me that it could stay up here. Test this as support. Then I'll be a bull. I'll be a mega bull. And this thing will probably go back to 13,000 or 20,000 once it gets above this red block. But until then, I think people need to stop, with their bias. All right. This is going to, the as fast as prices move up, folks, the bleed back down like this, like when it takes a whole month to, let this bleed go away slowly, that's where people truly lose it. They start selling. This whole run was really just BS, right? And then boredom really also just makes them sell. And then that, this is really just garbage. Then that was a short squeeze and then slow bleed back down. And the reason price slowly bleeds back down is because that is its natural tendency. Its most natural way for price to flow is a nice slow bleeding movement. When you see massive movements like this, it's just unnatural, or the market is just really weak and there's positions to be exploited one direction or another. In this case, when this broke down, market was really weak. This was not a surprise, or should not have been a surprise to most people if you were, like myself, saying that this was a descending triangle and it had to break down, because this was all distribution. Price had already kept tapping this support right here, tap, tap, tap. And then finally, when it broke through, it wasn't really a surprise, right? But this is a surprise, okay? This is not likely for price to, make moves like this without having payback to the downside. So I would expect a nice slow bleed for a couple of weeks, kind of like we did over here, all right? And this would really just, bore everyone to death. Every bull is going to start being bearish again, okay? So that's really my thought process. I'm going to get to this 1 second. I think one of my members had a question, so I'm going to answer that real quick. All right. Okay, CME futures, BTC chart. Okay, why do they have to be filled? All right, this is a perfect question. So I'm going to answer this. Okay, so here's the CME chart. All right, folks, if you don't know how to get to that, just type in BTC 1 exclamation point. All right. BTC CME charts. Okay, these are the futures charts that the CME traders trade off of. You can also alternatively go to CFTC, COT reports, which are commitment of traders reports. That allows you to see how futures traders are positioned for price, whether they're short or long. And you get to see how institutions in the CMEs are actually positioned as well. Okay, so it really helps, when you understand which direction they're positioned. All right, so anyway, going back to the gap, right? Here's how gaps happen. First of all, okay, because CME markets are not 24/7, they're, I think, 24/5, okay? Well, actually, they're not even 24/5. I think they're like 9/5, which is, Monday through Friday. I think regular market hours from like 9:30 a.m. to 4 p.m. And then I think they start up Sunday somewhere around like 7 or 8 p.m., something like that, if I'm not mistaken. So what happens basically is, when price makes a move like this, somewhere in the middle of the week or the weekend, mostly the weekend or off hours, like at night, all right, you have this gap, okay? The gaps are not magic or anything, all right? But what this gap tells us is that A lot of CME futures were probably not prepared for this. When prices ran up like this, right, it left a lot of traders in the void. Because if those traders were short, right, this whole thing spiked up, okay? Or even if, say, the traders are short right here, this whole thing spiked up and gapped up over the weekend. And so now these traders are underwater. This whole gap means that this amount of money is what's underwater for the traders who were short. So why do these gaps get filled? And is it necessary for the gaps to get filled? It's not really necessary or compulsory to get filled, but it often happens just because of the way markets function. And I'll explain that to you in a second, okay? So when you have a movement like this way up here, right, what happens is these traders are underwater. And because Bitcoin is sort of a smaller market, okay, it's easy to push around this market, right? Couple $1 million, you can move the market up or down with a couple of friends. All right, rich people, big whales, big traders can definitely push this market around, but they can't push it around by themselves. They have to let the momentum slide with them. So what this tells me is what I showed you earlier, right? When I showed you this chart, okay, when I showed you this chart right here, I said that on the daily time frame we hit resistance, okay? We hit the 4-hour resistance as well right there. So what these CME traders are probably hoping for is hope that this resistance holds and do their best to defend this area, because what's going to happen is if this thing keeps running up, they're going to be more and more underwater, okay? But if they hold this position right here, all right, in this area and slowly push it back down, the market will find momentum to push it down with them. And the market will help fill this gap right here. So these traders who are caught in this area right here, all right, they can then close out their positions. Or, all right, they can then go back into profit when this runs up like this, fills the gap, and then pushes back down, all right? So this is why gaps happen. It's because traders were not expecting this. This happened overnight or when markets were closed, at least for the CME. And now they're hoping that, all right, let's push this thing back down, see if we can fill up that gap to ensure that, we are not just getting destroyed in this position, all right? Here's another thing. Look at where the gap lies right now, okay? Remember what I said earlier, right? The low of this gap right here is 88.75. The high of the gap is around 93.60. Well, look over here. Remember how I stated earlier that price will probably come down to this particular area, this yellow block, right? You can see that's very close right there. That's between $8,800 and $8,600 right there, okay? So if price pushes down, we'll go back to this key area that's consolidation, all right? And we will also fill in this gap right here. And I'm more confident that this will happen, not because there's a CME gap. I never say that there's only one reason. There's always multiple reasons for price to go up or down. And this whole China, BS is never really the start or the spark that price needs to start a new bull run. Remember that in bullish markets, all right, it's never one news event that destroys price or destroys a market and turns it into a bear run, okay, or a bear cycle. Same with, bullish markets, right? When they're going to start, it's never just one event, okay? Over this span of 3.5 months right here, there was probably a lot of events that were happening, that were positive and bullish. And then this accumulation was already happening. Okay, so market will always tell you what it's going to do in higher time frames, in ranges, in accumulations, or support turned into resistance, or resistance turned into support. Price will always show you what it wants to do. And then you can start figuring out, okay, this is the likely area where momentum seems to be going, and that just makes it easier. This way you don't have to sort of inject your emotional bias. Okay. All right. Weekly chart. Okay. So here's the weekly. All right. From this was a really good weekly candle, but it wasn't the best candle in terms of wanting to be bullish. Again, So like I showed you guys that resistance, right? This is the weekly resistance block before price is sold off. So just like I showed you over here on the 4-hour, that initial point of breakdown, the daily point of breakdown right there, and now I'm showing you the weekly, okay? So there are 3 different time frames are telling you 3 different areas that price needs to climb above to ensure bullishness. The daily and the weekly are a bit more coordinated, right? So you can see that in this order block right here, price then broke down, came back up, tested it as resistance, right? And again, this was like 3 months of consolidation. It broke down. Of course, it should try to come back and test it as resistance before sliding back down again, right? I mean, even back here, right? When prices broke down, okay, it went up like this, came back, pulled up, broke down all the way. Look what happened. Price came back into resistance, lower high, lower high, lower high, boom, capitulation, okay? I mean, I would say it would be really funny if this thing, or I'm sorry, this thing right here happened over here. I mean, I wouldn't be surprised, right? Strong rejection by the bulls right here around 7,300. Strong rejection by the bulls here around 6,000. Pushes back up, but unable to close above, critical resistance, and then slides back down. All right. So this is why I'm not really concerned, folks. And, I know there's people out there with their bullish narratives, and I'm not trying to be a perma bear, or I don't have anything against Bitcoin. I love Bitcoin. I'll be a bull once, price breaks up above here, right? And then pushes off. Okay. But for now, I'm still leaning bearish. I don't know how I can be bullish just yet. All right. And even this green block, like I stated earlier, this was all, previous consolidation right here. Look, you can go back, touch right there, multiple touches right there, touching that green block, boom, price comes back here into resistance, and now is sliding down again. All right. Okay, so now you know a couple levels to watch, the way to go about price action. Again, folks, don't listen to the noise right there. All right, people are going to tell you to buy up here, and you're going to get screwed. All right, at least if you're going to buy, at least wait for the confirmation above that initial point of breakdown on the 4-hour. At least do that, or the daily or the weekly. Who cares if you have to pay a higher price? And the reason most people are kind of losing money when they're trying to chase runs like this is because they're not following technicals, which is truly the language of this market. So when you're chasing price like this and you don't have a game plan, understanding where resistance is, where support is, when I should get in, when I should get out, where I should set my stop, you're basically shooting yourself in the foot before you even get into a trade, right? And then you close out of a trade at a loss, and then you have lower capital or less capital than you came into the trade with. So then you have to use higher leverage to try to break even. So then you lose more money because you freak out because your positions are big, your leverage is big. So it's a very vicious cycle, folks, and I really hope that you guys get out of that. Don't even if you don't want to come learn from me or join my community, at least try to learn for yourself. Okay, do yourself a favor. Try to be a good money manager for yourself. Try to manage your risk. Remember that rule number 1 in this game is capital preservation. Okay, rule number 2 is to grow that capital. If you haven't locked down rule number 1, you're kind of screwed for rule number 2. Okay. Anyway, folks, come join Cryptosomniac. Hit the products page right there. Technical analysis course, Advantage membership. And come trade with us. Come learn and see how we trade, and come see who we are. We have a really good established community from traders all over the world, people from all ranges of experience and all walks of life. Some people are stay-at-home moms. Some people are doctors. Some people are business owners. Some people are just learning how to trade in their early 20s and 30s. Some people are older in their 40s and 50s. Kind of longer swing traders. Some people have day jobs who want to just get into swing positions, where we explain, what our swing positions are, whether it's short term or medium or long. Okay. And then again, Bitcoin analysis is where I provide videos like this, right, for the public, but I also provide multiple updates through the day. So while you guys are getting a video once every morning for free, I'm providing multiple updates through the day, trade setups right here, everything that I'm thinking about in the market, positions I'm taking, where I'm looking to get in, get out, constant conversation in trader talk as well. So you can see, what you get for free is maybe 5% of what we are doing in the paid side. Okay, now I know people look down upon paid groups and stuff, but folks, anything in life, if you're good at what you do and you have something valuable to offer to the world, get paid for it. There's nothing wrong. And those that are criticizing you for getting paid for something like that are the people who wish that they did get paid for that. Okay, so don't worry about it. All right, just come join the community. Come learn from us. Come really just check it out for yourself. Okay. There's a Discord link at the bottom of this video in the YouTube description. There's also a discount link. All right, I'm gonna tell you guys this because it is a secret, but there's a discount link in the YouTube video if you want to sign up for membership, and you will get, I think, 15% off for today. Okay, if you do sign up. All right, so thank you so much, folks. You now have levels to watch, a different way to look at the market. All right. And I hope you guys actually do your own due diligence or come join, at least learn from us, take my course. And again, with this course, you will get 7 free days in all these locked channels that you see. The education section, the trader talk, the leverage trading, the short-term, medium, and long-term trades, Bitcoin analysis, where I provide, videos twice a day. All right. So come join, and I will see y'all soon. All right. Cheers.